What measures are telling you that there could be too much exuberance in the markets right now?
Well, the headline sentiment indicators like the investor intelligence bull-bear ratio is at levels that have really been exceeded in the past. Same thing is true with individual investor sentiment indexes. If you look at some of the relative strength indices on the major equity markets, they seem to be a little bit stretched as well. And this seems to be confirmed in the bond market, in credit, where spreads between high-yield bonds and treasuries are at an all-time, or not an all-time, but a 10-year tight. So it does appear that, at least in the short run, things have gotten a little bit stretched.
Yeah, I mean, it's funny because there are so many measures and you can really sort of use whatever measure you want to make whatever case you want, right? So it's about conviction at the end of the day, would you say?
Yes, and I would say that even if we do get, some sort of pullback somewhere in and along here, I think it's important to note that in our view, it wouldn't represent the end of this bull market. It would represent maybe just a healthy pullback, because the underlying fundamentals are quite strong. No matter where you look, we're seeing good economic growth, and it seems to be accelerating. You're seeing very strong earnings growth. And one thing about the earnings is the upward revisions are just now starting to come into the bottom-up analysts' forecasts. The top-down strategists were ahead of things right in the wake of the passage of tax reform, but just only within the last week or so, it seems as though the analysts' bottom-up reports are starting to catch up, and that's giving the equity markets a second wind here.